Hi, everybody. Welcome back to my channel. This is Oliver Wiedmaier at Ollie _ all caps on Twitter. Today is July 30th, and this is going to be a market review covering the market as of today and what we can look for and what we can expect into the next week of August 1st through August 5th. So like what I always do with these market reviews is I like to look at the market from the inside out. And the first thing we're going to do is look at the put call ratio and see what that story is telling us. So here we have the put call ratio. This is ticker PCCE on TradingView. This is something that I like to look at when doing these reviews. Right here at 1 is the line of extreme bear, and then this line here is extreme bull. So this zone would be the bear zone, and this would be the bull zone. And then somewhere in the middle would be kind of a choppy or just a sustainable market, maybe perhaps trading sideways. So we can see we've been living in the bear zone since, basically all year. We were living in the bull zone basically all of 2021. And then you can look, this is where we had the COVID crash. And then we were on the the extreme bull zone for a lot of 2020. And then, it's worked its way down into the bear zone. But anyways, as of today, we are on the upper side of the bear zone. We are potentially working our way closer and closer to this 0.75 area, which is the line dividing the bulls and the bears. So ideally, we want to keep working our way up and then hopefully kind of create this trend line here and then work our way up and then have a nice bull run to close off the year. Okay, and here we have the number of stocks trading above the 200-day moving average. We have made a bottom here in early to mid-June, down to about 15%. We are now up to about 31%. And so, ideally here, we want to just keep working our way back up to the very peak. February 21, we were at almost 92%. And then the COVID low, we were down to about 5%. So ideally, we want to just keep working our way back up, and then never taking out this low here would be ideal. Now we look at the 50-day moving average. We had a extreme rip off of the kind of this 12% low here, and now we're up to almost 70%. So this is very constructive. When you're flipping through charts, you'll see a lot of the stocks are above the 50-day, but not quite above the 200-day moving average. So hopefully in the next week or two, we will start rising above that 200-day moving average. And ideally, we want to see a large percent of stocks with their lowest moving averages above their slowest moving averages. Right now, we are kind of in an area where the 50 is below the 21 and the 8, which is how you want it to be. But then you have that 200-day moving average above it all. So ideally, we need to get above that. And then, we want to see 8, 21, 50, 200-day moving averages in that order. But that's where we are as of right now. You can see we are kind of June 21, November 21, and then about April 22, we're getting kind of rejected in this area. So, this is a point that we need to really bust through, and then perhaps even come down, retest, and then move our way higher. So this is very constructive. We don't want to see this number decreasing. Moving on to the VIX, we are right at 21. This is an indicator that we like to look at in order to measure the volatility of the market. When this number gets lower and lower, it indicates there's less chop and less day-to-day fluctuation in price action. We want this to be, down here back to, about 15 or so. It actually got this crazy 80 number during the COVID crash, and then while we were in this big bull 2020 bull run, it actually got to 20 and then to 15. And so right now we're at 21, and we want to see that number below 21. That would be ideal. So here we have the NASDAQ comp. And this is a very important indicator. Here is net highs, net lows. This goes back to the breadth of the market of how many stocks are making new highs. And we've been on a long streak from April 7th to essentially essentially July 15th of 2020 of just making net lows. That means that there are more stocks making lows than there are stocks making highs. But we've had this nice rip here since, call it July 18 to, as I'm making this video, the end of July, we are at net highs, which is very constructive. That's what we need to see. What the indices are doing are actually far less important than what individual stocks are doing. The individual stocks come first, then sectors. What are the sectors doing, and then the indices? That is how I look at the market. I want to see what stocks are doing before I see what the groups are doing, and then I want to see the groups before I see what the indices are doing. That's looking at the stock from the inside out. So we can see on the NASDAQ, we consolidated here. And like I said in the last video, we were going to have to make a decision. And we made the decision. We took it higher, we retested, and then we ripped off of that. And so we are still very much in this consolidation. We haven't had a very strong test of weekends. We are weekends or new buyers, perhaps. So we really need to see the new buyers being tested. And so if we can hold this line or even hold this level here, let me make a line here. Perhaps we come through and then retest this area before we start making new highs. Then that would show a overall strength. But again, we want to look at what individual names are doing before anything else. We'll take a look at SPY. So again, here's the SPY. This is an absolute rip off of this test zone here. Again, as I've indicated in other videos, we topped January 4th. And as of today, we've bottomed June 17th. And if that's the case, then we should keep making higher highs and lower lows and retesting along the way in order to show. Now, there is the speculation that every bear market has 3 legs down. And so this would be leg 1, this would be leg 2. And so the speculation, what everyone's feeling is that there's going to be another low taking out this June 17th. I don't know. I don't have 40 years of experience doing this, but I can tell you what's working and what's not working. And as of right now, things are looking very good. And so I'm just going to trade day by day and really keep my exposure low until we really start proving weak hands, the strength of the weak hands. So we'll take a look at the Qs now. And again, same thing. We consolidated here, but we're still very much consolidating. A lot of the earning reports, the Qs we close above this, a lot of this is due to the strong reaction to earnings from stocks like Google, who absolutely had bad earnings but ripped. Still very much consolidating in the stage 1 area here. Microsoft, bad earnings, but look at that rip off of the earnings. It's that's what we want to see. We want to see good reaction to bad news. That means that bad news is priced in, which means that would mean that the low is already in, that we're anticipating bad earnings. We got the bad earnings, so we say, okay, we knew this was coming, now we can buy more. It's just how the institutes look at things. NVDA, NVIDIA is a very important stakeholder in the Qs. And so what we like to see is strong movements in these types of names. Same thing with Tesla. Tesla had a big 5.78% rip. I bought it as it broke out of here, and I made some pretty good money on this. And so what I'm looking for is, again, for a little backfill and then some more upward movement to the right side. So let's take a look at some sectors now. I'm looking for their 10-day moving average to be above the 21 day moving average, and I have a indicator. It's called Ollie all caps go no go. I'll put it down in the description. This is free on TradingView, and what you do is you just turn it on, and then it'll indicate a green background when the 10 is above the 21, and a red background when the 21 is above the 10. And so if we just go down the ETF list, we'll see that we're basically in the green zone and everywhere, which is exactly what we want to see after this low. So, you know, we have ITB, which is home construction. We have SMH, which is semiconductor. TAN, absolutely ripping. We'll come back to that. But TAN is showing, you know, solar is showing the absolute most strength. You can see big buys here. Look at the weekly, insane volume coming in. And so solar is where we want to be and where we're going to invest our money. XHB is home builders. It's green background. XLK, which is technology, ripping off the lows here. XLP, same thing, green background. FXI, which is the China, not doing good, which is fine. We don't want to we want to stay clear of China names anyhow. So this is indicating that our thesis is correct. We don't want to trade China names. XLB just flipped green in the later part of the week. XLB is materials. And so what I do is I just keep going down the list, and I'm looking at all of these sectors and ETFs. And this is XOP, oil and gas, flipped green. JETS, which is the global JETS ETF, flipped green. Online shopping, flipped green. And then I'll just keep going down the list, and then later I'll show you the screener that I use in conjunction with this indicator. So here we have solar, which made a 44% move in the month and the 30% move in the week. So we want to look at solar. Rental and leasing, 21% move in the month, 12% move in the week. What else do we have here? Electrical equipment and parts, 20% move on the month, move on the week. And you know, I don't want to go too much further than that. I just want to focus on those top three. So what I'll do is I'll click on the solar here in FinViz, and then I'll just kind of go through the charts here. I have some charts already indicated on TradingView. So of course, end phase is absolutely this is a trade that I made. So I have it marked up, but we have this huge earnings gap, and then it held, and then it held again. So this is exactly where we want to look for an entry. Right now, there is no point for an entry, but we know that there is volume here, which means that the institutions are here and there's huge earnings, and that's exactly where we want to be. So we're going to look for end phase the next days and next weeks, and look for a pullback, a strong pullback that holds, and that's where we're going to buy. Other names in solar is Run. We had this big gap up. We have earnings coming up, so we want to watch for a peg, a price earnings gap. ARRY, another thing, gapped up, entry above the high of this stick here. This is going to go on my focus list. So that there you go, ARRY. That is a focus list stock I'm looking for. Moving on. So we want to look at some names in rental and leasing services. I already have some pointed out on FinViz. HRI, which is Hearse, absolutely ripped off of bad earnings. URIs, United Rentals, ripped off of great earnings. This is a focus list stock that I'm going to be looking for a pullback on, because this is absolute power right now. This is nothing but money coming in, and that's where I want to be. Hertz, same thing. Big earnings. Look at this big volume. So I'm looking for a pullback here. And some other things with the group, electronic equipment services. So we'll look at names within that name or within that sector in that industry group. But for now, I do just want to point out one last thing. We have Google, Microsoft, the NVIDIA, Tesla. These are the names that we want to focus on. If they're getting power in those names and their breakouts are working, then we know to look outside of those names. But those are the types of names, the Apples. Those are the types of names, JP Morgan, that the institutes have to be in. Amazon. They have to buy those names. And so we want to look for opportunities for us to purchase those stocks when they're showing the most strength. And then we can look outside of that. We look at the groups, solar, the rental services, and see who's getting the most earnings, who's getting the most volume. And we want to purchase those stocks at a risk defined level, at a high probability setup where there's money coming in. There's a tight spot where we can only risk a few dollars in order to make a substantial run. And so here's my prediction. I think the lows are in. I think we have a little bit to go before I start really pushing the pedal to the metal. I'm not quite ready to overnight a whole lot of risk. I'm not quite ready to be more than 50% exposed. And so what I'm doing is I'm just watching. I'm looking at these leaders. I'm looking where the money's at, and I'm waiting for the pullback. The pullback might be next week. It might be the week after, but there needs to be a pullback, and that's when I'll put my money to work. So right now, I believe the low is in. I believe the low was June 17th, 2022. And I think that we are having a summer rally. We're having a earnings rally. And if this can hold, then I think that late September, even October, we're going to have a very strong bull run that's going to take us to the rest of the year. I won't be posting my focus list here. If you want my focus list, come over to the Discord. I'll put the Discord in the description. It's Voyage Trading Group. It's absolutely free. It's a collaborative effort where advanced traders and beginner traders share ideas, and we do post some alerts and some buys and sell signals. So if you're interested in that, please join the group. It's absolutely free. Thank you guys. Don't forget to like, subscribe, all that kind of stuff. Thank you.